Yo guys, FX, welcome back to another video. Today's video, right? I'm simply just gonna be providing or showing you how price is fractal, right? Because as you've all heard, price is fractal. In other words, whatever's happening on higher time frame tends to happen on lower time frame, right? So I'm gonna be showing you guys how to trust specific zones, but in this case or in this asset class, right, I'm gonna be showing you how to trust fair value gaps and identifying where price is most likely going to react off, right? Because in simple terms, right, let's go like this. You got structure, right? I believe this is pretty much how price behaves. Price is either going to sweep up buy stop or sell side, or it's looking to target an inefficiency, right? So personally, how I approach it is I look to see price sweep sell side, right, and then draw lower to a fair value gap or an order block, right, or a breaker, right, or an inversion fair value gap, if that makes sense, right, on the current time frame or lower, if that makes sense, right? So as soon as price sweeps sell side, right, and bearing in mind this is higher time frame, it can be whatever time frame you wanna see price react off, right, if that makes sense, right? Meaning that this whole structure is universal, right? In other words, as it's happening on this time frame, it happened on this fair value gap right here, it happened right here, pretty much in all the movements within price, right, if that makes any sense, right? So in simple terms, I look to identify this type of structure within price, right? I look to see price sweep sell side, targeting a PD array, in this case a discount array, meaning that we look for longs within it, and then within, as soon as price reaches this fair value gap range, right, I scale down into a lower time frame while still monitoring that current time frame, and I look for displacement. What is displacement? Displacement is when if you're bearish and you're anticipating bullish price, right, we look to see price sweep the most recent high, right, short-term high in that case. For example, price was moving bullish right there, right, reacted off this order block right here, this one, right, it managed to pretty much reach the min threshold and then drop lower, right? But like, now how do you trust that the price is gonna remain or continue bearish, right? You look to see price sweep a short-term low, right, like this, and then it draws back above to this breaker and this fair value gap, dropping lower to sweep sell side, same as here, right? Then now we have a fair value gap. It's not an order block like this, it's a fair value gap. That makes sense. So like in this current time frame, you scale down to a lower one. This is pretty much how it would look, right, from higher time frame to lower time frame, right? So what you are able to identify here, right, you're looking for the same almost structure to happen here, but just on a lower time frame, right? For example, if this was the weekly time frame, you scale down into the daily, and this is how you identify price, right? And then within this range, right, as soon as price reaches the fair value gap, you want to see some form of retracement higher to the most recent high, right? And usually when we're in a bearish trend, if you want to identify the most recent short-term high, right, you would want to see an order block. You want to see price sweep it and close above it, right? And then that becomes a breaker, right? And then that whole range indicates displacement. Therefore, now we have potential to move higher, right? Which, if we zoom in, it would look something like this. This is pretty much just this range right here. Keep pay attention, right? So as soon as price sweeps this high, right, you have a fair value gap right here. And pay attention, price managed to close above this short-term high and then created this busy buy side imbalance, sell side inefficient, right? Then draws back low, right? Now this is where you're looking for to execute your trades, right? You want to see this is pretty much where you look to execute a trade if you want to go high, right? As soon as price reaches the FVG gap high, and then you don't see price go higher. But like now, if you really want to be selective with it and you want to be specific with your entries, right, you would scale down. This is how it would look, right? This is just this range right here, meaning that this range, right? So like now, you scale down onto a lower time frame, from this time frame to a lower one, right? And now, if you're really bullish, right? Personally, I don't want to see price reach the consequence encroachment level or close below it, right? But I would understand, right? And if you're able to identify, right, we've got pretty much 3 arrays within this range that price controls, right? The first one is this FVG gap right here. The second one is this one right here. And the third one is this auto block right here, right? So within this FVG gap, we don't want to see price disrespect all 3, right? And then price could react of any one of this, right? And how do you clarify or identify the price is respecting them? You don't want to see, let's say, for example, this FVG gap. You don't want to see price close below it, right? On this current time frame, if this candlestick was to close below it, then it indicates that this becomes an inversion FVG gap, which may support price drawing lower into this one, right? Or this auto block, or potentially this sell side, or even drawing lower, right? But like now, how do you identify price supporting bullish structure within this range right here? How do you know that this specific FVG gap is the one that price is willing to use to draw price higher, right? You scale down to a lower time frame, right? If this was the 4-hour time frame, you'd scale down into the 1 hour. Then you're going to see something like this. Fractal, same as higher time frame, you're going to see price finding sell side. As you can see, draws lower into this FVG gap right here. And paying attention, this FVG gap is this one right here, right? And then now, if you're able to pay attention within it, we have another FVG gap. Busy. Buy side imbalance, sell side inefficient. Meaning that only buys were delivered within this range or supplied or provided within this range. Now price draws back lower to rebalance this range to support higher prices, right? Now, when you have this type of structure, what do you want to see? Displacement again, right? Therefore, you scale down to a lower time frame while identifying this current time frame, right? And you want to see something like this, right? This is still this chart, just a bit zoomed in, right? This is pretty much a benefit of hindsight. In other words, this is personally how I take my notes and how I stay in key or in sync with what I'm analyzing or seeing, if that makes sense, right? So like now, this whole range right here is what's happening right here. And if you can pay attention, price sweeps this high, draws low. Where is it going? It's targeting a FVG gap, right? Which is within this range. This high is this high right here. This candlestick sweeps this high, draws lower. And on this time frame, it seems like price is drawing lower to this auto block right here, meaning this becomes a proportion block to support price higher. This is also how you trust auto blocks. On lower time frame, they targeting something, which could be a FVG gap, right? Price draws lower, and then this could be your initial entry, which you stop on a lower time frame. And bearing in mind, this is fractal. In other words, that's basically what's happening right here, right? Meaning that you could still zoom in here, look to see sell side swept, and then you want to see displacement here, right? It's just that you don't really want to go too low to time on your analysis, whereby now you're starting from the weekly time frame, scaling down all the way to the 1 second or whatever. Like, that's just gonna confuse you, right? So you pretty much gonna have to look for a sweet spot, or you're gonna see or execute your trades whereby whereby it's no longer confusing for you. In other words, if you are comfortable with this execution to see price right high, this is where you would stop, right? But if you're not go sensitive, this is where you stop, or here, if that makes sense, right? So all this, personally, I'd advise you to utilize this, all your executions within the 3-day range, which is from midnight to 4 p.m. New York time, right? All our sessions and zones for high volume that's to be presented within this range. And if you're fancy, can divide the whole range into a quarter shift, or maybe you want to execute based on a London session kill zone or the New York kill zone, AM trend or PM trend, whichever one you like, And if you found this video helpful or enlightening, just be sure to hit the thumbs up. Be sure to subscribe and leave a comment on what you'd want me to make a video on, right? Just to help you understand a bit more, right? But keynote, I would highly suggest and advise you to go into your own charts, identify and look for this phenomenon, if that makes sense. Because personally, as soon as you start seeing price like this, it just changes everything. Now, hope everybody stays safe.